I spent $114.75. Think of a figure as to what it would be worth today.
Oh man.
Well, it's
okay.
But I just want your audience to think for a second.
Okay.
The answer is about $400,000.
Oh.
To put 90% of the funds I lever into. The S&P 500 is, I don't know whether it's 80% of the market value of everything you can buy in this country, and it's over. I think it's over 20 trillion.
Mr. Buffett, how can I make $30 billion?
Start young. Charlie's always said that the big thing about it is we started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the snowball, the nature of compound interest is it behaves like a snowball of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old. I would do it exactly the same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums, and there's more chance that something is overlooked in that arena. And as Charlie has said earlier, it won't be like doing that in 1951 when you could leaf through and find all kinds of things that just leapt off the page at you. But that's the only way to do it. I mean, you have to buy businesses or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy them you have to buy into good businesses. And that advice will be the same 100 years from now in terms of investing. That's what it's all about. And you can't expect anybody else to do it for you. I mean, people will not tell you about wonderful little investments. It's not the way the investment business is set up. When I first visited Geico in January of 1951, I went back to Columbia, and that rest of that year I subsequently went down to Blythe and Company, and actually to one other firm that was a leading, Geyer and Company, that was a leading analyst in insurance. And I thought I'd discovered this wonderful thing, and I'd see what these great investment houses that specialized in insurance stocks said, and they said I didn't know what I was talking about. It wasn't of any interest to them. You've got to follow your own. You've got to learn what you know and what you don't know, and within the arena of what you know, you have to pursue it very vigorously and act on it when you find it. And you can't look around for people to agree with you. You can't look around for people to even know what you're talking about. You have to think for yourself. And if you do, you'll find things.
So I want to ask a little bit about some of the new investing things going on in the markets. And Greg Wondra from Bakersfield wonders about target date funds. And I wanted to also ask about all the new index funds with a brain. Are those things really adding value?
No, probably not. The S&P 500 index fund is the one to use. That's the one I used in that bet I made for 10 years. It's the one I've told the trustee for my wife to put 90% of the funds I lever into. The S&P 500 is, I don't know whether it's 80% of the market value of everything you can buy in this country, and it's over. I think it's over 20 trillion. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today.
Oh man.
Well, it's
okay.
But I just want your audience to think for a second.
Okay.
The answer is about $400,000.
Oh.
So if I, as a little kid, had taken that $114 I'd saved on shoveling snow or whatever I'd done, $400,000 today, one person's lifetime.
And there's no reason to think that we don't know if it's 400,000, but that same sort of process or returns won't happen starting right now.
The S&P 500 companies have earned well over 10% on equity, often 15% annually for years and years and years and years. They've done it with Democratic administrations, with Republican administrations. Now, you get money compounding at that kind of rate underlying your investment, and you get a diversified group of that. I mean, you're going to do well.
You had invested $10,000, and you put that money in an index fund. We didn't have index funds then, but you, in effect, bought the S&P 500. I'd like you to think about how much that $10,000 would now be worth if you just had one basic premise, just like in buying a farm, you buy it to hold throughout your lifetime and you look to the output of the farm to determine whether you made a wise investment. You look to the output of the apartment house to decide whether you made a wise investment if you buy an small apartment house to hold for your life. And let's say instead you decided to put the $10,000 in and hold a piece of American business and never look at another stock quote, never listen to another person give you advice or anything on the sort. I want you to think how much money you might have now. You'd have $51 million, and you wouldn't have had to do anything. You wouldn't have to understand accounting. You wouldn't have to look at your quotations every day like I did that first day. I'd already lost $3.75 by the time I came home from school. All you had to do was figure that America was going to do well over time, that we would overcome the current difficulties, and that if America did well, American business would do well. You didn't have to pick out winning stocks. You didn't have to pick out a winning time or anything of the sort. You basically just had to make one investment decision in your life. And that wasn't the only time to do it. I mean, I could go back and pick other times that would work out to even greater gains. But as you listen to the questions and answers we give today, just remember that the overriding question is, how is American business going to do over your investing lifetime? I would like to make one other comment because it's a little bit interesting. Let's say you'd taken that $10,000 and you'd listen to the prophets of doom and gloom around you, and you'll get that constantly throughout your life. And instead you'd use the $10,000 to buy gold. Now, for your $10,000 here, look in your safe deposit box, and you'd have your 100 ounces of gold, and you could look at it, and you could fondle it, and you could, whatever you wanted to do with it. But it didn't produce anything. It was never going to produce anything. And what would you have today? You would have 300 ounces of gold, just like you had in March of 1942, and it would be worth approximately $400,000. So if you decided to go with a non-productive asset, gold, instead of a productive asset, which actually was earning more money and reinvesting and paying dividends and maybe purchasing stock, whatever it might be, you would now have over 100 times the value of what you would have had with a non-productive asset. In other words, for every dollar you have made in American business, you'd have less than a penny of gain by buying in the store of value, which people tell you to run to every time you get scared by the headlines or something of the sort. It's just remarkable to me that we have operated in this country with the greatest tailwind at our back that you can imagine. It's an investor's haven. You can't really fail at it unless you buy the wrong stock or just get excited at the wrong time. But if you own a cross-section of America and you put your money in consistently over the years, there's no comparison against owning something that's going to produce nothing. And frankly, there's no comparison with trying to jump in and out of stocks and pay investment advisors. If you'd followed my advice, incidentally, or this retrospective advice, which is always so easy to give. If you'd follow that, of course, there's one problem about it. Your friendly stockbroker would have starved to death. I mean, and you could have gone to the funeral to atone for their fate, but the truth is, you would have been better off doing this than a very, very, very high percentage. But that's the only way to do it. I mean, you have to buy businesses, or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy them, and you have to buy into good businesses. And
Are those things really adding value?
No, probably not. The S&P 500 index is the one to use. That's the one I used in that bet I made for 10 years. It's the one I've told the trustee for my wife.
We have operated in this country with the greatest tailwind at our back that you can imagine. It's an investor's haven. I mean, you can't really fail at it unless you buy the wrong stock